What's up, boys and girls? My name is Ryan.
I'm Neil.
And today we want to talk, this is going to be a little bit of a long video, but it's really educational for people that are looking to refinance or thinking about refinancing and they're not sure. I'm going to explain to you why it's really important, especially right now, to refinance, along with if you're in the process of refinancing and maybe a couple numbers don't seem like what we originally talk about. I'm going to explain why. I'm painting the story of my brother. This is what was unfolding over the last couple days, and we started off on a certain note, and there was a little change that we were all kind of, not really all of us, but at first I was like, wait a minute, what's happening? And I want to cover that right now. So let's go back to the beginning. My brother was doing a $255,000 refinance, and he was going from what, Neil?
3.625.
FHA. Believe it or not, a year later, he remembered the rate. That freaks me out. Anyway, so we priced out his loan. And he could go from FHA to conventional from a 3.625 to a 2.875, which usually FHA rates are higher than conventional rates.
No, FHA rates are lower than conventional.
I mean, lower than conventional rates, right? They're usually lower. So the fact that we could get him into a lower conventional rate is a huge move. Plus, we get rid of the mortgage insurance, assuming he's got 20% equity in the house. Now, let's go through what happened. His current loan payment, just for the principal and interest, was $1,133. His taxes are $408. His homeowner's are $409. His insurance was $80, and his mortgage insurance was $161. His total payment comes out to $1,783. Obviously, we're just using rounded numbers here. When we priced his loan with the new interest rate, the estimate was his new payment would be $1,057, $409 for taxes, insurance $80. And no mortgage insurance. New payment, $1,546. He'd be saving $168 from his current payment. You would think that's good, right? What did you tell me is one of the big issues that we can't control, that when we initially talk to people about refinancing, something happens. What is it?
Well, the taxes go up. Your township raises the taxes, or your homeowners. Homeowners always goes up. What they do is if you just bought the house, they lowball you the first year. And the second year, you just get a renewal notice. You don't look that renewal notice is $40 or $50 more, $60 more, because that's how they get their money back.
So let's just paint the story as to what actually happened, guys. My brother's payment, which was $1,133, let's say he didn't refinance. His taxes went up. Instead of $409, it's $453. And instead of $80, it went up to $105. That's an additional $69 per month that was added to his mortgage. So when we recalculated his mortgage, instead of it being $1,546, it came out to $1,615. And he's like, wow, wait a minute, I thought I was in the 1500s. He was way excited about that. Then it was $1,615, and he was like, what the heck, I thought I was saving more money. He was, until we got the update on both the taxes and the insurance. And then when we calculated his new payment, it's still cheaper by $168. But if he didn't refinance,
his payment would have been $1,852.
That's a difference of $237, guys. So it's important for you to realize that every single year, your taxes and your insurance will go up. The benefit of having a conventional fixed 30-year mortgage or 15, whatever it is that principal and interest, this part right here,
will never change.
It will stay the same for the life of the loan. The only two components that will change are the taxes and the insurance.
Well, it doesn't go up every year.
Well, right, it does.
It can go up every year, and it does.
Insurance
sometimes.
typically will, right?
Right.
And taxes, for the most part, will too. Every once in a while, they'll have an assessment, they'll bounce around a little bit, but most times you'll see gradually they'll go up. Guys, it's really important to think about this. When you have a chance to go from 3.625 down to 2.875, getting rid of $161 a month mortgage insurance payment, lowering the rate, it just all makes sense. So depending on where you are right now, look at your interest rate, figure out what it is and say, hey, am I in an FHA mortgage?
The problem with refining, it doesn't change your life. You're still in the house. It's not like you're just buying the house, you're living in an apartment, you're going, wow, I see that shiny object, I see that house. You already got the house. And you don't think about, well, I could save $100 or $200 a month. That's a lot of money.
Go ahead. I'm doing a calculator. I want to see something.
So people aren't like excited about refining. Yeah, I'll refi. Okay, I got to get you W-2s. but you don't realize you're saving so much in the long run.
Assuming the taxes and the insurance don't change or don't go up, guys, you would save $60,000 in this scenario. $168 a month times 360 payments is $60,480. That's a lot of money. So if you have questions about this, let us know. If you're thinking about refinancing, do it now before interest rates go up. We don't know if they're going to go up or when they may go up. They're not going to stay this low forever. So give us a call.
We have a VA refi right now. If you're a VA and you need an IRL, it's called a refi streamline. I need nothing from you. I need no pay stubs. I don't need anything. I need your certificate of eligibility, show that you're eligible. That's it.
And credit, right?
And your credit. If your credit's over 700, the rates are 2.5 right now.
Wow.
30-year fixed.
That's awesome. More awesome information, guys. So please, we hope you find this helpful. If you have any questions, let us know. If you liked it, share it. We love you. We appreciate all the love that we're getting. Have an awesome day. We'll catch up with you later.
Have a great weekend.